Hi, and welcome back to segment 3 of our three-part series on the Wealth Preservation Trust. I'm your host, Attorney Michael Potter. I'm sure you'll recall in segment 1, we looked generally at what the Wealth Preservation Trust is and how it functions. In segment 2, we started looking at who the players are, the grantor, the trustee, the beneficiaries, and so forth. And now in segment 3, we're going to look closely at exactly what the Wealth Preservation Trust can own and how it will interact with you and your assets so as to protect them from lawsuits, creditors, divorce, and estate taxes. It's nice to know that the Wealth Preservation Trust is a very flexible entity and it is powerful in its protection. Now, to protect it, we're going to need to shift ownership into the trust, and the timing is going to be very important. It's often said that timing is the difference between a hero and a fool, and that certainly is the case when it comes to asset protection. You know, pretty much anything that's in your name can be taken away from you, whether it's a home or an investment, a bank account, a vehicle, savings accounts, and so forth. They can all be taken away if they're in your name. However, the idea of the Wealth Preservation Trust is to shift ownership out of your estate where it's not you for purposes of the rules of attribution, and therefore it can be protected. What are some of the assets that can be owned by the Wealth Preservation Trust? Well, that's where the flexibility comes in. It can own just about anything that you have in your name, whether it's real estate, mutual funds, stocks and bonds, option trading accounts, intellectual property like patents and trademarks, and certainly it can own the stock of any company that you own. And it can own memberships in any limited liability company or limited partnership. And with that kind of flexibility, the shifting of ownership with the trust gives you a much greater degree of protection. Let's talk just a minute about layering. If you've been to any of my workshops around the country, you have probably heard me use the analogy of layers on the onion. And by that analogy, I'm referring to various layers. When you peel that layer back, there's another layer. And that layer begins to create frustration. And in the case of an onion, you begin to shed tears as you peel back each of the layers. With respect to asset protection, using layering, we can have different kinds of entities such as corporations, limited liability companies, and limited partnerships used in between the trust and you, where you can control those entities, but the majority ownership is held by the trust. So let's look quickly at just a couple of examples. Let's say that the Wealth Preservation Trust is the majority owner of a limited partnership, perhaps even the more advanced version, which is the limited liability limited partnership. That partnership could have you as the general partner controlling the whole thing, but the majority ownership could be held in the name of the Wealth Preservation Trust so as to give you very healthy layers between a prospective lawsuit litigant against you and the assets that you most want to protect. Let's look at another example a little more streamlined. Let's say that you are a real estate investor, as an example, and you do two types of investing, one of which is to fix and rehabilitate and redevelop residential real estate, which you then flip for a profit. And let's say that you also hold some investments which are good rental properties or land that you decide to hold for the long term. Well, the properties that you flip could be held inside of an S corporation owned by the Wealth Preservation Trust. And the properties that you hold for the long term could be held inside of a limited liability company, or LLC, for the long-term profit and long-term cash flow opportunities. Both of those kinds of companies, the corporation and the LLC, could be owned by the Wealth Preservation Trust in the majority, so as to give it the layering that we want and to give it the layering that a creditor or a divorce or a lawsuit cannot penetrate. So the trust can own directly corporations, stocks and bonds, mutual funds, limited liability companies, limited partnerships, and all variety of assets. But the layering effect can give you a higher degree of control and a better distance for purposes of lawsuits and divorce and so forth. The other thing that I really like is that transfer of ownership outside of your estate into the Wealth Preservation Trust while you're on the up curve and accumulating assets can render those assets outside of your estate for purposes of the federal estate tax. One last thing to consider about the Wealth Preservation Trust in terms of assets. Probably one of the most powerful ways to use the Wealth Preservation Trust is to fund it with life insurance. For example, a single person can have a policy owned by the Wealth Preservation Trust, and then at their eventual death, when they pass, the money goes into the Wealth Preservation Trust and it comes out to the beneficiaries both income tax free and estate tax free because of the nature of the trust. With married couples, I often suggest that we look at using a second to die life insurance policy, sometimes known in the industry as survivorship life insurance. And that's because it does not pay until the second death. In other words, when the second spouse dies, then it pays into the trust. And many times, those second to die or survivorship policies, the death benefit is actually less expensive than an individual policy. So a married couple could use that to benefit their heirs in a tax-free way, completely free of income tax and estate taxes. That can be very powerful planning. Well, as usual, I've given you a lot to think about, and I'm sure that you have questions. And if you do, I hope you'll get in touch. Either myself or a member of the staff, we can get back in touch with you and answer your questions about the Wealth Preservation Trust, how it works, how it interfaces with your investment holdings, your savings, your retirement planning, etc. And you'll find it to be a very effective and very powerful way to plan. So if you have questions, please feel free to get in touch. I'm attorney Michael Potter, and I look forward to hearing from you.